Get ready for back to school with H&M. From mix and match basics to new denim styles, find their favorites for in and out of the classroom at your nearest H&M and on hm.com.
The More Money Show with Steve Moore.
Entertaining and informative.
On the Red Apple Podcast Network.
That's the Beatles, folks, and we kind of changed directions here because usually I play the Beatles song Money, but today I thought I would play that. By the way, that's an awesome song. Paul McCartney, of course, wrote that song, and it is one of my favorites. So, and you never give me your money. But just so you know, by the way, there is a historical context to that song. It was written in the final days of the Beatles, and Paul McCartney was having a fight over money with the other three Beatles, and so he wrote this song. You never give me your money, and it was kind of a bitter song, but it's a great musical song. Anyway, we'll go back next week to playing Money, and sometimes we play Can't Buy Me Love, because the question, of course, on the show is always, can you buy love with money, or is money greater than love? So I love your guys' reaction to that. I'm in a good mood today, folks. We're in the dog days of summer. Thank you so much for joining. This is the More Money Show. I'm economist Steve Moore. I am been so privileged to be doing this show now. I think it's been 4 years we've been doing this every Saturday afternoon. And many of you get this. We have affiliates now throughout the country. Many of you get it on Sunday as well. So if you're listening on Sunday, thanks for joining. We are going to talk about what is going on with this U.S. economy right now, because it's kind of confusing. We're getting all sorts of conflicting data out there. And by the way, tonight I thought, I haven't gone to see a movie in a long time. I want to watch a lot of Netflix, but I haven't really been that interested in going to the theater to see movies, because I don't think the movies are very good anymore. Although I think the last movie I saw was Top Gun, the Tom Cruise movie, which was good. The remake was good, but I think I'm going to go see Naked Gun. And that was one of my favorite, the funniest movies ever, with Leslie Nielsen, Naked Gun 1 and 2 and 33 1/3, or whatever they called it. So we'll see whether they can remake that movie as great as it was. And incidentally, you may recall, I was thinking about this because my son went to see it last night, and he said it was good, not great. He said it was good. But remember who one of the stars of that movie was? O.J. Simpson. That's how long ago that movie was made. So that's what I'll probably be doing tonight. Okay, so let's get serious. Let's talk about what's going on with the economy. I'm gonna tell you, do not panic. We got a bad jobs report yesterday, no question about it. The revisions downward for the previous months, 300,000 or so, was a huge number. And so the economy, what this is telling us, and I've been saying this, folks, so I think I've been mostly right about this, that there was a lot of turmoil back in April and May and June with the Trump tariffs. And people don't realize, especially in Washington, how globally integrated our companies are. One of the things that make our companies so great and so dominant is we take parts and, minerals and all sorts of, supply chains from other countries. We bring these products into the United States, we integrate them, and then we make great products, and then we sell those. So what was happening is, in our manufacturing plants, they couldn't get the copper, or they couldn't get the steel, or they couldn't get the auto parts, or whatever it was. So look what happened. Our manufacturing jobs actually decreased as a result of the Trump tariff turmoil back in April, May, and June. Now, listen, I know a lot of you love Donald Trump. I'm a great admirer of his. I think he's been amazing on the economy, on the border, on national security. But we have to call a spade here. And the truth is that the tariffs do cause a lot of disruption in supply chains. And so that's when a lot of firms with assembly lines and so on couldn't get the parts, they had to lay off workers. And I think that's what you saw back in the early, in the spring and the early parts of the summer. But what's happened since then is two big things. One is Trump has gotten a series of trade deals that have brought clarity to the issue. And also these trade deals, for the most part, are very much in America's interest. They level the playing field. They force countries to treat us fairly. And it's that simple. And then we've also done a lot to eliminate some of the non-trade barriers as well that have made it very difficult for our technology companies. For example, the Europeans discriminate against our great technology products, our great firms like Google and Apple and Amazon and Meta and so on. They've been discriminated against because they slapped a special tax on these companies that is taking billions and billions of dollars away from American shareholders. Trump is fixing that. Then, of course, we got the big, beautiful bill. And that only passed, about 3 weeks ago. So it hasn't really quite sunk into the economy that we've got permanence in the Trump bill. We've got the capital expenditures can now be written off by businesses. So what I'm saying is, all of this stuff is starting to kick in. There was hundreds of billions of dollars that have been pledged by countries to invest in the United States. I don't know if they're going to completely keep their promises, but some of those promises are going to be kept. That's a lot of money coming in the United States. What I'm telling you is right now, believe it or not, I'm bullish on the U.S. economy. I'm bullish on the stock market. I think this sell-off has been excessive. I think we're going to see a resumption of the bull market we saw at the beginning of the year. So do not panic, folks. People sell during downturns, and that's always a mistake. So, look, so I'm not an investment advisor. I'm not here to invest, choose stocks for you. What I'm telling you is, I think good things are coming. So, stick with us, folks. We have a great show lined up, and I appreciate you listening on the More Money Show, and we will be right back.
The More Money Show with Steve Moore on the Red Apple Podcast Network.
When you're having a baby, there's a lot on your mind. At Northwell's Staten Island University Hospital, you can rest easy with our reimagined labor and delivery experience. Our new Grapuso Women and Newborn Center provides private suites, overnight accommodations for a loved one, and a top-level NICU, all powered by the team that cares for the most moms and babies in New York. It's care made for Staten Island and made for you. Visit northwell.edu/newbaby. Staten Island University Hospital. Raise health.
With so many options, why choose Arizona State University?
For me, the only online option was ASU because of the quality. Their faculty was really involved with their students and care about your personal journey. The dedication to my personal development from my professors, that's been extremely valuable to me.
Earn your degree from the nation's most innovative university. Online. That's a degree better. Explore more than 350 plus undergraduate, graduate, and certificate programs at asuonline.asu.edu.
The More Money Show with Steve Moore.
Entertaining and informative.
On the Red Apple Podcast Network.
Now we turn to one of my favorite segments of the show, something we've been doing for many years, and that's turning to Ryan and Bob Payne of Payne Capital Management, two of the people who I trust when it comes to giving good advice about how you can make more money. So Bob and Ryan Payne, thanks so much for joining. As always, let's start with what happened at the end of this week. We had a pretty good sized sell-off in the market. People were spooked, obviously, by the bad jobs report and also by the recurrence of tariff talks by Trump. And, I was saying on Maria's show Friday morning that I think, if anything, there might be a buying opportunity here because I think a lot of what, happened with the job report was really reflecting what happened in May and June. And, we got these trade deals, we got the tax cut done. So, Bob, I'll start with you, the elder statesman. What do you think?
Well, first of all, we had a lot of information thrown at us this week, Steve. We had new tariffs. We woke up the new tariffs on Friday morning, and then we had a jobs report that was a little weaker than anticipated. We've had big earnings announcements. Just a little. Well, it's 73,000. We expected 100,000.
But we had the big revisions downward. That's what really concerned me, from the previous months.
True. And I think that all this tells us is that Jerome Powell should have cut interest rates earlier this week.
Uh-huh. Yeah. What do you think? How much, if you're the Fed chairman, Bob, how much would you cut rates and when would you do it?
Well, I think that we did have some inflation numbers that were a little higher than we anticipated, but now with the jobs number being revised, I think he starts with a quarter point. I think in the September meeting we're going to see a quarter point cut.
Quarter point. Ryan, do you agree with that?
I say be careful what you wish for here, Steve. I think, look,
Right.
I think a lot of people are on board with the rate cut, but I think the problem here is the reason that hiring was so weak over the last quarter or so is because with tariffs, businesses haven't had a lot of certainty right now. But I think
That's right.
if we're reading the tea leaves now, if we look at the growth for last quarter, it came in way better than expected. We had 3% growth, which is actually an acceleration of growth.
Yes.
Amen. Right. So I think companies are going to have the confidence to hire. And remember, those job numbers are backwards looking. So I think we look out in the future, I think we may have inflation for the right reasons, and that's more economic growth. And if you remember, if you look at inflation, the historical average since World War II is 3%. So if we do see an uptick in inflation, we go back to normal inflation. I don't think that's the worst thing in the world, especially if it's for the right reasons. So I think, the way to look at this right now is with optimism, not pessimism. And I appreciated you on Maria's show on Friday. You're the only optimist amongst all those economists that were way too negative.
Well, maybe that's the time, when everybody's swimming in one direction, maybe it's time to swim in the other one when it comes to these markets, Bob. What do you think?
Well, Steve, what I know over my 50 years of helping people to manage their portfolios, when all the experts and all the forecasts agree, something else completely different is going to happen. So, it's good to see, people unanimous in their negative output. I don't know how you can argue with this economy. The economy's been very resilient. Stock market's been hitting all-time record highs just the other day.
Yes.
One rainy day doesn't make a winner.
That's for sure. So I'm talking to Bob and Ryan Payne of Payne Capital Management. By the way, Ryan, how do people even reach you?
They simply go to bebullish.com or give us a call at 866.
Be Bullish. I love it. Bebullish.com. That's so easy to remember.
It doesn't get better than that. It sends the right messaging for sure. So
I think that, given that we got the tax cut done, which really is going to strengthen the economy, and then we've got he announced this big trade deal with Europe this week, and Ryan, the Europeans agreed to invest several $100 billion in the U.S. So that would seem wouldn't you want to maybe invest ahead of that?
Yeah, I think you're 100% right. We're not talking about the fact that we're getting a lot of commitments for investment from other countries, and maybe we don't get all of it, right?
Right. I don't think we're going to get all of it.
Yeah, we're not going to get all of it. That's like, let's not put the rosy colored sunglasses on. But if we get, a percentage of it, that's a huge boost for economic growth. But also, even with the tariffs, which going into this year, tariffs were roughly around 2.5%. Steve, you can correct me if I'm wrong. Let's say they go to 15%. Well, that's a couple $100 billion a year for us to pay down our deficit, and nobody's been addressing that for decades.
Right.
So, I think this whole deficit or consumption tax, whatever you want to call it, can also be a win, because if we start paying the deficit down, that can also keep inflation in check. And no one's really talking about that, but I think that's the huge fringe benefit that in the big, let's face it, that's the big pink elephant, or the big elephant in the room, is the sense that we're not paying the deficit down, but I think this is going to be a huge catalyst to do that.
So, Ryan, I'm going to ask for you for some personal advice, if I may. So my wife, who does our investing, I don't do it, she does, and she's a lot better at it than I am. But we bought a lot of NVIDIA back about 5 years ago, and it was one of the best purchases we've ever made. But we keep talking about, do we sell it? Do we sell it? Do we sell it? Do we take our capital gains on this? What would you advise the Moores?
Well, first off, drinks are on you. I've joked about that before since it's gone up so much. But I think bottom line here is, you live by the sword, you die by the sword. And let's face it, it's had a magnificent run here. But you have to start thinking about nothing's going to go up forever. And I think right now you're kind of getting to peak demand for NVIDIA's chips. I mean, we're talking about $400 billion this year in AI infrastructure spending just by the big tech companies. At some point it's going to tap out. Somewhere in here it's going to tap out, and I would think out of it's like the ninth inning. It may go up higher here if we're talking about a baseball game as opposed to the first inning. And, if you think about retiring, living off your money, to Bob's point, you want to have dividends, and NVIDIA pays like no dividend.
Right.
And at some point, bottom line is that demand is going to dry up, and that stock probably will go the other way. Like that stock's had 70% corrections in the past, right? It could happen again. So I think, you want to think about diversification here. As Bob likes to say, I don't know when, I don't know why. That's why I diversify. And it's okay to be early. We learned that back in the dot-com bubble. When that burst, it took you, if it was Microsoft, it took you like 13 years to break even. So it's okay to be early. It's okay to diversify. And right now you've got plenty of places where you're generating a lot of cash flow. And that's what you have to think about if you're looking to retire, is you got to start generating real cash flow.
Bob Payne and Ryan Payne. And the reason that I have them on the show and that they are sponsors of our show is they've been bullish for the last several years when a lot of people were bearish, and you guys have been right. So congratulations on your good run. It's BeBullish.com. This is the More Money Show, and we'll be right back.
Hey, and if you're thinking to yourself right now, okay, I need to get my finances in order. I need to get my retirement plan in place. Well, here's your shot to do it. Bob and I, for the entire show, will keep 10 slots open. If you saved over $1 million for your retirement, we'll run for you our now famous Total Financial Master Plan, and we'll do that with no obligation or cost. It's a full holistic review. We literally look at everything. There's not a firm out there that will do this work up front. We go as far as building you your own personalized financial portal. We'll give you a bird's eye view of your entire financial life and hone in on every financial issue you need to address today, whether it's an income plan for retirement, how to take Social Security, how to draw from your portfolio, factor in inflation, and not run out of money. We're going to build you that dynamic income plan. We're going to look at diversification. Markets have been wild this year. I don't need to tell you. Has your portfolio been way too volatile? Or have you been sitting with way too much money in cash, CDs, money market funds, paralysis by analysis? Well, we'll put together a full investment game plan. We'll show you how to grow your wealth, but most importantly, protect it over the rest of your life. And we'll look at fees and taxes. Wall Street loves to sell you high cost, tax inefficient products, whether it's an annuity, mutual fund, brokerage product, structured product, insurance. We'll go through every investment you own. We'll do a deep dive. We'll show you how to reduce the cost and optimize your portfolio for taxes. It's not what you make, it's what you take. You'll get our full tax playbook. We have 10 slots. If you saved over $1 million for your retirement, we'll run our Total Financial Master Plan. All you need to do is text or call right now at 844-752-6692. That's 844-752-6692. Speak with one of our financial advisors, certified financial planners at 844-752-6692. That's 844-752-6692. That's 844-PLAN-NYC. That's 844-PLAN-NYC.
The More Money Show with Steve Moore on the Red Apple Podcast Network.
This episode is brought to you by LifeLock. Between two-factor authentication, strong passwords, and a VPN, you try to be in control of how your info is protected. But many other places also have it, and they might not be as careful. That's why LifeLock monitors hundreds of millions of data points a second for threats. If your identity is stolen, they'll fix it, guaranteed, or your money back. Save up to 40% your first year. Visit LifeLock.com/podcast for 40% off. Terms apply.
Lowe's knows that more projects mean more tools. For a limited time, new and existing MyLowe's Rewards credit card members can get 12-month special financing on purchases of $299 or more, in-store and online. Don't wait to get the things you need. Get special financing today. Lowe's. We help. You save. Now through August 27th, choose 12-month special financing on purchases of $299 or more. Offer subject to credit approval and cannot be combined. Minimum monthly payments required. See store at Lowe's.com for details.
The More Money Show with Steve Moore.
Entertaining and informative.
On the Red Apple Podcast Network.
Welcome back, folks. This is the More Money Show. We are national now. We went national about 4 weeks ago, syndicated throughout the country. I want to thank all the people listening to the show from coast to coast. We have affiliates in California, San Francisco, Kansas City, Chicago, Detroit, of course, the New York area, et cetera, et cetera. So thank you for joining. We like to talk about economics. We try to make economics and finance fun and understandable, which people think when they hear about economics, they cringe because they think it's so complicated, but it really isn't. And one of the guys who I always turn to on economics and finance and making more money is my good friend David Bahnsen. You all know David Bahnsen because every time you turn on Fox Business News, there's David. I think he's always, you and Stuart Varney are great together, David. Are you going to be on tomorrow with Stuart?
No, but I do have a couple appearances coming up. I love being on with Stuart, and I always love it when you're on right before me. It gives me
yeah, exactly.
to talk about.
So I always just listen to what you say, and then I just say what exactly what you said. But David is also a great among. Look, he's the Warren Buffett of our times. He's been an amazing investor, and he is also. I don't know how you find the time, David, but he's also the author of many books. The two that I like the most, I think these are your two most recent, David, are Full Time, which is work and the meaning of life. And I love that. And we've had many discussions with David on this about how important work is, not just for your income, but for your soul, for your reason to be. And we need more people working. And the other one I love is There's No Free Lunch, which of course is something that Milton Friedman used to say. And it's all these nice little sayings in economics and why they are true. And there's nothing better than the one that's unfortunately there is no free lunch. So David, let's get right down to it. Thanks for joining. By the way, if you want to access his information, I just went to davidbahnsen.com and I found all your stuff, David. So I don't know if there's a better way to reach you, but that seemed to be a good. Is there another way people can access your stuff?
Well, the easiest website to remember, because my last name is so tricky to spell, is dividendcafe.com. Dividend Cafe.
Got it. So, okay, so much to talk about, David, because this is what I would call a tumultuous week. It was like a roller coaster. One day we get this great GDP report. The next day, a lousy jobs report. We had all the talk of trade turmoil, new tariffs, and so on. I'm not a big tariff guy, as you know. I don't think you are either. But given all the news that came in this week, where are you at right now? I mean, I remain kind of bullish. There's a big sell-off, but a lot of this information that came in that was negative was 2 or 3 months old.
Well, I think it's a mixed bag, Steve. And so if we try to look at it objectively, it's funny I got to bring up Dividend Cafe because it's what my whole commentary was about yesterday at dividendcafe.com is trying to assess these tariffs objectively, not trying to cheerlead short term and not trying to go criticize the president short term, but rather what is it we need to be looking for in 6 months, 12 months, 18 months. And my argument is that what a lot of people are obsessed with is whether or not tariffs are going to push prices up and the whole inflation issue.
Right.
And that's fine. That if certain prices do go higher, it's not going to help the president politically. But I don't think that's the biggest economic question, Steve. I think people have to look for whether or not the tariffs start to constrict total trade. Because if they do, then companies have a choice to make. If demand starts moving lower, they either have to raise prices and possibly lose market share, or hold prices, but then lose margin, lose corporate profits. And I promise you, if you look at the GDP number, the one thing we cannot afford to see go down right now is corporate profits. It was not a great GDP number for Q2 because basically for us supply-siders, the thing that most matters in economic growth, production, business investment, it was only up 0.27%.
Right.
All of the move higher in GDP was just simply the decline in imports that had been followed by the big spike in imports the quarter before. So those two things kind of offset each other. And you end up with right now an economy halfway through the year that on an annualized basis is barely growing at over 1%. So my question that I put forward is, will we get new markets open in these trade deals? Will the talk of Japan and European Union with liquefied natural gas will there be more investment into America, or will the protectionists win out? Will all this silly talk about lowering the trade deficit win out? And it will constrict economic activity, because if foreign investment drops, then that means, of course, that productivity will drop. And I don't think that's what we want. So I have questions, but I don't feel that anybody should be predicting with a lot of certainty, oh, this is going to be terrible, or, oh, this is going to be great. I think there's a lot of uncertainty out there right now, Steve.
I agree with almost everything you just said. I think it's a great analysis of what's happened and what these statistics tell us. The one thing that, let me ask you about, first of all, you're exactly right about the importance of investment. You know, I've always said international economics are very important. Whoever gets the most investment wins. And if we can suck in and that's, you know, if you look at the Reagan years when we had the big boom, we sucked all this capital into the United States because we cut tax rates and had freer trade, et cetera, et cetera. And you've got these commitments now, David, as you know, from the Europeans and other countries to invest more in the United States. And I don't remember the exact number, but it's in the hundreds of billions of dollars. It's not inconsequential. So I would think that if the Europeans keep those promises and invest in here, and by the way, you know, it's a good place to invest in the United States, particularly compared to Europe, that will solve some of the problem, won't it?
Yes, but the problem is that it isn't really a clear commitment yet. We have a framework.
Right. Yes.
And yet there's certain questions as to what parts of these dollars being thrown out are including foreign direct investment, and is that at risk of going down if tariffs impede demand? And so I do agree that that's the real opportunity, but it's also an unknown right now. And then there is a piece to it as well. And it's just, I am so supportive of the president when it comes to deregulation, pro-growth tax cuts, energy. But this idea of he is personally going to direct the investments, that's a good point. Never understood that. Understood a president to be trying to drive that economic decision making. It's not what we believe in.
No, this is a very important point. So I want these foreign countries to invest in the United States because we have lower taxes, because we have, a deregulated economy, because we're producing a lot of energy, because we have great workers and great entrepreneurs and great companies. I'm totally with you. I think the idea that this president or any politician is going to tell, you know, companies where to invest in, that's a really bad idea.
And it's not necessary because, like you point out, with our dynamic and innovative economy, then capital has a very funny way, as you know, Steve, of migrating to its most rational and efficient use. So there's no need for Washington, D.C. to be an intermediary.
So I was saying that, you know, there was a pretty big sell-off when all these numbers came out. But, you know, as I look at it, David, you know, you got the president's deregulating. You left out one thing, by the way, that's very positive, which is look at what's happening with government spending. Government spending is flat or falling. And I think we'd agree that's a good thing because government got way too big under Biden. You've got, you know, these new trade deals, which is good. You got the tax cuts. You know, so much of what I see out of Washington is moving in the right direction, notwithstanding the tariff turmoil. Trump is doing a lot of amazing things that would seem to generate growth for the future.
Well, and I think that the big issue with the big, beautiful bill about business expensing, about bonus depreciation, you know, those things are genuinely supply side. And I think that when you put let's say, $300 billion of benefit that represents up against what may be a $300 billion cost in tariffs, then there's a tug of war. And the principle that I've had to live my financial career by of humility comes into effect because I don't have the ability to know which one's going to win out. But I wish that we didn't have the tension. You know, I really, you had about $30 billion of tariff costs in 2018 after the president did the largest supply-side corporate income tax cut in history. That was stimulative. That pushed us up above 3% real GDP growth. that created a boom that actually lasted, after we got through the COVID nonsense. All of a sudden, we were back in a little healthier place with the economy. And obviously, Biden spent too much and regulated too much, and they passed some bad bills. But we were still repatriating foreign dollars because of President Trump's first-term activity. I don't know what is on the table right now that represents a boom that big, and yet the tariff issue is much bigger. So I have to be skeptical in my optimism, or at least cautious.
Okay.
But I do see the good things you're talking about. I just don't believe people are thinking about it the right way when they're only focused on whether or not prices go higher. Inflation is not the only risk here. Growth matters, and growth comes from capital investment.
So I only have a few more of your minutes of your time. I'm talking to the great David Bahnsen, one of the best investors in America, and you see him all the time on Fox Business and Fox News. So I wanted to just switch to this issue because we got the jobs report, and this is something you and I have talked about this on this show over and over again. But for people who aren't as familiar with your work, your full-time book, which is called Full-Time: Work and the Meaning of Life. One of my big concerns about the economy, and we've talked about this, David, is males in working age, their labor force participation has been flat or falling. And I see social, cultural, and economic problems with that. And can you just talk to that? Because your book really addresses this issue.
Yeah, let's just put some numbers on it, Steve, so the listeners understand how severe it is. We came out yesterday with a 62.2% labor participation force, and even for prime working age people, it's at 84%. And of course, that 24 to 50, there's a lot of women in that data set that are at home as mothers, and so you expect a little difference between women and men on that, just historically. The number of prime working or looking for work is at a low we haven't seen. It's just absolutely unfathomable. And I believe it speaks to a spiritual, a social, a cultural problem that then becomes an economic problem. It doesn't start as an economic problem. It becomes one. And I really think all this talk about we need our manufacturing jobs back, well, okay, maybe some will come back. I don't think all of them will, but I hope some. But guess what? What if there's no workers? That's the challenge, I think, is that we have got to solve for a country that celebrates a really strong, robust work ethic.
So one of my concerns is the social impact of this, of men without jobs. And that is that, women are now earning in many occupations more than men are. And that does cause some, people are going to accuse me of being a sexist and so on for saying this, but the reality is that women want to marry men who are doing economically better than they are. And women are having a harder time finding men that are doing better than they are. And that is because one of my big concerns is the fertility rate is way down, David. And I want to see more babies in this country. And so what do you think about that whole issue?
Oh, I think, Steve, you're hitting the nail on the head of a vicious cycle that has a possibility to become a virtuous cycle. Marryable men are more employable, and employable men are more marryable. All right. So if one of those things gets worse, the other one gets worse. If one gets better, the other one gets better. And if you want the recipe to a happy life, Steve, I know how hard you've worked and all the things you've done in your career. I know you're a happily married man. These things feed together and create a happy life. A man who doesn't look for work and doesn't have someone to date and to marry and to have kids with, that creates a negative feedback loop where you do see these people finding drug abuse and alcoholism.
Hey, David, we got to take a quick break. We got to take a quick break. Can you hold over for a few minutes and come back?
I'm happy to, Steve. You bet.
Oh, okay. We're going to take a quick break, folks, and we'll be back with David Bahnsen. This is The More Money Show.
The More Money Show with Steve Moore on the Red Apple Podcast Network.
Life is a workout, and Smoothie King is here to help you power through. Whether you're grinding out bicep curls or muscling the couch across the living room, crushing morning miles, or sprinting through back-to-back meetings, Smoothie King has fuel to help you maximize your workouts, own your recovery, and elevate your game. Give your body the energy, protein, and power it needs with a lineup of delicious smoothies made to help you conquer your goals. Only at Smoothie King.
The More Money Show with Steve Moore.
Entertaining and informative.
On the Red Apple Podcast Network.
Welcome back, folks. I twisted the arm of my good friend David Bahnsen to stick over for another segment because we were having a very fascinating conversation. Yeah. By the way, you see David Bahnsen all of the time on Fox News and Fox Business News, one of the top investment advisors in the country. His latest book is Full-Time: Work and the Meaning of Life. And so, David, to continue our conversation we were having before the break, what do we do about this? I mean, I see this as a big problem for the economy, that men are not working like they were in the past, that their labor force participation rate, as you just were citing the statistics, is down. We have more women working and fewer men working. And I don't like those trends. I don't like them for economic reasons. I don't like them for social reasons. I don't like them because it's leading to issues like lower marriage rates and so on. So do you have any solution to this problem?
Yeah, so there's so many different aspects here. You know, if we're talking about federal government, let's stop this nonsense where federal government money goes out like water for undergraduate degrees, where we're leaving people with $200,000 of debt and a sociology degree, and let men who want to go be welders and electricians and plumbers and other things where, by the way,
David, those people make a lot of money.
That's what I was saying, is that there's great six-figure incomes available.
Yeah.
And not after you do it for 15 years. That's going to be available in just a couple years sometimes. But the federal government is limited, but of course the deregulation is important. I think that the states have a lot they can do with a lower regulatory burden in the workforce with employers. But then a lot of this, Steve, I mentioned before, spiritual, social, cultural. Right. Churches need to be promoting a work ethic. We need stronger family formation. A lot of our housing policies are basically geared to be anti-family. They subsidize low-income, multifamily housing, and we don't have enough single-family stock built. All of these things contribute either in public policy or in the culture to a bad work environment.
So I agree with that. And I would add to that, David, the fact that, by the way, his book is Full-Time, and it's a great book about the dignity of and meaning of work and why work is so important. And you and I have talked about this on previous shows, but for our new listeners, correct me if I'm wrong about this, but people who work are happier, they have more self-fulfillment, and they live longer.
Well, substantially so. And they, of course, achieve better economic well-being and have other benefits and health coverage. So there's this whole, portfolio of benefits that go along with it. But the happiness is the most important one. That's the goal of all this. Way too many conservatives that love free markets have not talked enough, Steve, about the purpose of it. The purpose of a free market, a free society, is for human flourishing. And that's obviously, a big theme in my book, No Free Lunch. This is part of human flourishing, is production and work and the fulfillment that comes from it. And so I believe that the recipe for a happy life is faith, family, friends, and work.
So one last thing on the way out, David. It's been a fascinating conversation. I'm talking to the great David Bahnsen. I want to get your reaction to a proposal that a lot of my conservative friends have come up with. How do we bring birth rates back up? Because they're very, very low right now, and they're problematic. We're going to have a shrinking population if we don't do something about this. And there's a real movement of conservatives to pay couples to have babies, and I wonder what you think about that.
Oh, I think it's an awful idea and totally unnecessary. Now, first of all, we have to call it awful just on the basis of our own principles, that the government becoming an economic actor in key issues of our lives is generally something we don't believe in, and it really has a certain nanny state component to it that I'm deeply uncomfortable with, and it lacks a limiting principle. Who's to say at some point we don't have the government paying people not to have children?
Well, David, it's been a great conversation.
It's unnecessary.
We've got a hard break now, but I appreciate you coming on. That's David Bahnsen. Get his book full time and watch him on Fox News. And folks, this is the More Money Show.
The More Money Show with Steve Moore on the Red Apple Podcast Network. The More Money Show with Steve Moore.
Entertaining and informative.
On the Red Apple Podcast Network.
Welcome, folks. This is the second hour of the More Money Show. Thank you so much for joining. These are the dog days of summer, and I hope you're having a wonderful Saturday afternoon. By the way, every time I hear that term, dog days of summer, I think of that famous movie with Al Pacino. What was it? Dog Day Afternoon. That actually was set in New York. A great movie if you've never seen it. I think that was made in the late 1970s. But these are those dog days. I hope you're going to have a nice vacation sometime in August and stay cool. In D.C., where I live, we had just an oppressive week. It was like you felt like you were swimming when you went outside. It was so wet and humid. But we've had a really nice break in the weather. It's absolutely beautiful weather today here and most of the East Coast. So I hope you get out after the show is over. I hope you get out, get some fresh air, get some exercise, get some sunlight. All those things are really good for your health. One of the stupidest thing government ever did, and the government does a lot of really stupid things, was in the middle of COVID, they told everybody to stay home. And don't get exercise, don't go outside, don't get fresh air, don't get sunlight. Those are the best disinfectants of all. Let's hope that we never do something that stupid again, because for those of you who are new to this show, you know that I've been a real stickler on this, that the evidence is overwhelmingly clear that lockdowns killed people. And it was completely unnecessary. All we had to really do to save lives was keep people who were, in danger of COVID, that is older people and people with respiratory problems and so on. I don't want to get back into that, but just to say, get outside and enjoy this wonderful, wonderful summer day. In the meantime, I want to stick with the conversation that I was having before the break with my friend David Bahnsen on this issue of what is going on with the low birth rates in this country. I view this as a real crisis. We are not having enough babies. And what I want to do, and it's a sensitive subject because, I bring it up, oh, you're a sexist, you only look at it from a man's perspective. And that's true. I do only look from a man's perspective because I'm a man. So what I'd like to do is have the ladies call in, especially young ladies. If we have young ladies call in, and why is it, do you think, that these birth rates have fallen so much? Why is it that women are waiting till their early 30s to have a baby rather than their early 20s? My mom had 4 babies by the time she was 30 years old. Times have changed a lot, haven't they, over the last 40 or 50 years? But I do worry about this because the children are our future, as the old saying goes. And by the way, the one good thing is that our crisis is not nearly as bad as it is in all these other countries. If you look at India, if you look at China, if you look at Japan, if you look at Korea, the Europeans, they have birth rates that are so low, they're going to be totally depopulating their countries. And one of my theories on this, by the way, is I really believe that because for those of you who are as old as I am, I just turned 65. So if you grew up in the 60s and 70s, you remember it was all the doomsday stuff about overpopulation, and there's too many people, we're running out of food, we're running out of oil, we're running out of energy, we're running out of farmland, all of this stuff. And I think that really had an impact. And then, of course, now you've had this idiotic climate change debate that the world's going to come to an end in 20 or 30 or 40 years. And, if you think that the world's going to come to an end, why would you have kids? We have scared our kids to death. They think it's a bad thing to have kids, because who would want to bring kids into this terrible world that we live in when, of course, it's just the opposite. We're going to get into all these issues. We're going to talk about the economy, all of these things. I've got Bob Nardelli coming on. He is one of the former CEOs of Home Depot. Nobody understands what's going on with the economy better than Bob. So stick with us, folks. We got a full hour for you on WABC. This is the More Money Show. We'll be right back.
The More Money Show with Steve Moore on the Red Apple Podcast Network.
This is an ad.
I hate it!
An ad for crisp, refreshing Angry Orchard hard cider.
That is refreshing.
An ad that interrupted your podcast.
I hate being interrupted!
To remind you to stop being angry at me and crack open an Angry Orchard.
That's a good idea.
Don't get angry! Get Orchard. Angry Orchard Cider Company, LLC. AngryOrchard.com. Please drink responsibly. Angry Orchard is a hard cider with other natural flavors.
The More Money Show with Steve Moore.
Entertaining and informative.
On the Red Apple Podcast Network.
We are back, folks. This is the More Money Show, having a good time on a Saturday afternoon. I hope your Saturday is going wonderfully. I want to introduce my next guest. He's a good friend. He's one of the people I so much admire, one of America's greatest businessmen ever, Bob Nardelli. You see Bob Nardelli all the time on Fox News and Fox Business News. He and I appear sometimes jointly, and I just shut up when he's on because he knows so much more about business and economics than I do. But I just have to brag on this guy because I think most of you know this, but what a resume. I mean, my God, he was the chief executive at General Electric, at Home Depot and Chrysler, was very involved in the turnaround for Chrysler, helped build Home Depot into the amazing company that it is today. And so, Bob, thanks for joining.
Steve, thank you very much. You're always so kind, and well, you really stretched the obvious there. Thank you. Thank you so much.
Okay, well, you're fantastic, and so thank you for coming on. Got a lot of things I want to talk to you about today, Bob. Let's start with the news of the week, we got some good news and we got some bad news. You were a CEO. You hired a whole lot of people. How concerned are you about the situation with the labor market, given that we had, a big downward revision in the number of jobs that were created in the months of, let's see, May and June, and then a not very good report for July? It concerns me, but how worried should we be about this, and why do you think it's happening?
Yeah, well, thank you, Steve. It's a great question, and obviously you and I both watched this monthly report. And to your earlier comment, there was an adjustment of 258,000 jobs in the last 2 months. So,
negative.
Yeah. Negative. They took it down 258,000, and I've been doing this for 54 years, and I tend to look at that number with great interest. But I always ask the second question. In addition to the number we got of 73,000, which was disappointing, but from my point of view, not necessarily surprising, right? And, we're kind of averaging about 85,300 jobs a month so far this year. Let's look at the tail of the tape, right? 55,000 in healthcare. Why is that? Well, you said it a minute ago in your broadcast. We're old. We're getting old. and people need healthcare. But then you go down the tail of the tape, and you only added 15,000 in retail, 5,000 leisure, 2,000 construction. But here's the number I always look at, and I know you do too, Steve. We lost 11,000 jobs. We lost 11,000 jobs in manufacturing. Now, manufacturing contributes, I think the number I saw last was about 2.3 trillion contribution to the GDP. So that is a major concern for me. And what are some of the root causes there? Well, one, if we step back and we look at the prior administration, where major corporations were being forced to settle for a 40% wage increase. And we all knew that was not sustainable, but the threats of strikes and national strikes, whether it was in automotive, freight carriers like UPS, now they're having to resize the business. They're having to resize it in a dramatic way. And, it's certainly like carriers right now. If you stayed and worked at UPS full-time driver, with those wage increases, Steve, you'd make $173,000 a year.
Wow, that's a good salary.
Yeah, it's a great salary. But again, I think we have to be ever vigilant. We've got about 400,000, Steve, 400,000 open manufacturing jobs today. Yeah. And if you I keep track of these announcements and all these high tech companies that are laying people off with the notion they're now going to bring them into AI. There's a gap between the layoff and the onboarding. So I'm very concerned about the labor market. Now, wages are up, obviously, because of all these wage increases and settlements we have. But I'm truly worried about the labor market here in the U.S. It's further challenged. This president is doing an amazing job, trillions of dollars being committed to, shovel-ready projects, big factories. Mm-hmm. One of the largest aluminum rolling companies is putting $4 billion into a new plant in Alabama.
Wow. Did you say $4 billion?
$4 billion.
Wow.
This is the largest manufacturing plant in Alabama's history, largest aluminum rolling recycling plant in the last 40 years. And
what's the name of that company?
It's Novelis, and it's headquartered here in Atlanta. It's going to result in 1,000 full-time jobs, 3,000 contractors involved in it now, Steve. So it's I'm encouraged by those types of things. It's not shovel ready; it's shovel in the ground kind of a project, right? You and I talked about this. So I just think there's a mix going on here. We're kind of out of balance. We got open jobs. The one number that we should be thinking about is there's 12,000 government jobs lost reported.
Yes.
Now, am I right that this severance package for the government starts to kick in August and September? So we should definitely should see another reduction in government jobs, which is a good thing because you know this living there, right? Yeah, August.
Right.
I don't know how I get a full month vacation. Like,
well, there's a lot there to chew on, Bob. So let me parse that out a little bit. These are great comments. Sure. First of all, you said that there are how many manufacturing jobs open?
The last number I checked, Steve, was like 400,000.
400,000. That's what I thought you said. Okay, so. Yep. Answer this question, because you were, when you were at Home Depot, you were a major employer. So what's going on there? Because, people say they want the manufacturing jobs. There are a lot, when I talk to blue collar workers, they say, the jobs are going away, and yet there's 400,000. Now, I suspect, and correct me if I'm wrong about this, that there's a mismatch between the skills the workers have and the needs that the employers have. But what's going on there?
Yeah, there's no question. I was in the 2000s. We had 350,000 associates at Home Depot in about 2,000 stores in the United States. So yeah, it was. We would, for every new store.
You must have been one of the biggest employers in the country.
Well, we were quite large, and we were opening a new store every 24 to 48 hours, and that would take between 100 to 125 associates per store. So. Yeah, it was. We benefited a lot, Steve. We were the first ones to really go after the military post Afghanistan, and we hired 35,000 veterans. We had 500 junior military officers.
Yep.
We did the first 10% discount for veterans. So, we really tried to attract, motivate, and retain the highest performing workforce we could get. And I think you're spot on. I mean, there is a mismatch between the open jobs and the talent base. I mean, you aren't going to take a senior programmer and put him on a retail floor unless he's desperate. The other fact, Steve, you and I both know, is the people who are looking for a job over 6 months is increasing every month, right? So the time out of the workforce is becoming greater and therefore more discouraging to people looking for a job. So that's another big concern, Steve, I would put on the table.
One of the people who, was a mutual friend of both of ours, and one of the great Americans of all time was, of course, the great Bernie Marcus. And Bernie used to say, before he passed, I think about a year ago, that, and for those of you who don't know Bernie Marcus, he was, of course, one of the founders of Home Depot. And he once said to me, and I think he said this on TV shows as well, he said, this was back about 5 or 6 years ago. He said, the regulations are so onerous right now. He said, if those regulations had been in place, 30 or 40 years ago, he said we would not have been able to start Home Depot. And so my point of bringing that up is that the deregulation that Trump is doing should really help businesses grow.
There's absolutely no question about it. His first term, where it was, if you add one, you got to take 3 away or something like that. You were right at that time. God bless you for that.
Uh-huh.
And now he's back at it again. But, I was running GE Power Systems. It was about a $40 billion business. And for me to compete with ABB and Siemens, I never had offshoring. I never said I wanted to go offshore. I just had to be globally competitive. So my strategy was, where do I have to go to offset the tax burden, the EPA burden I've got to compete globally? Because we were about in every country around the world. You can imagine we built the last 2 nuclear plants in Taiwan, 3,500 megawatts each. So, it's getting rid of regulations, cutting the red tape. I mean, just look at the poor families that are displaced in California. And President Trump was out there and challenged the mayor to try to get these permits, and they're still bogged down. They lost millions of dollars for the fund. I mean, it's just crazy what goes on out there, Steve. You know that. You and I talked about it.
So one other issue I wanted to bring up with you, Bob, I'm talking to the great Bob Nardelli, who was CEO at Home Depot and Chrysler and GE. And I guess you worked for Jack Welch, didn't you?
I was blessed. I was blessed and fortunate.
I'd say so.
For about 30 years. And, I can't say enough about Jack, both personally as a friend and professionally as a real partner. So, yeah, it was a great experience, Steve. I also want to just talk for a moment, if I can, about this, our big, beautiful bill here that passed, because a lot of what's in there gets right at the heart of regulation, right? So for businesses, particularly middle market businesses, it would have killed these lifestyle businesses, these family founded businesses, if we didn't get that tax extension. Number one.
Yes.
Number two, what they did about being able to write off CapEx, what they've been able to do about expenditures. I mean, you just go down the list. If you look at the inheritance tax, if you look at the lifetime giving tax, I mean, it is just a plethora of positive actions that's going to help the individual and help the businesses in this country. So hats off to you and all of your colleagues for working that through with the president.
So thank you very much for saying that. I couldn't agree more. I think it is a fantastic bill. And that was something I wanted to ask you about, is shifting away from the tax bill then to the tariffs. You know me, Bob, I'm not a huge fan of tariffs. I'm much more of a conventional free trader, although I do love the trade deals that Trump has gotten. I think most of them are fantastic. But I think as I look at this jobs report, a lot of the overestimates of jobs were in, April, May, June period. And I believe, and maybe you have a different opinion on this, that's why I want to ask you about this, that there was a lot of supply chain problems when these tariffs took place. And we talked to a lot of middle-sized manufacturers across the country, and they said, we couldn't get the parts in. We had to, slow down production. We had to lay off workers. And so I wonder what your thoughts are about the tariffs and whether you think, what is your view about those tariffs and whether they're advisable?
Yeah. Well, there's no question, Steve, Liberation Day, if you remember that, and I know you do.
I do. I was there and in the Rose Garden. So I know what you're talking about.
Yeah. So it created the certainty of uncertainty for a lot of us.
Right. Exactly.
I remember it wasn't maybe a month ago, I'm sitting in a board review. We're going over, 30 pages of tariff issues by country, by product. And then remember the announcement came in and, we're changing this. So throw the deck into the garbage can. 2 hours later, whoops, let's go get it again. So it has created a lot of uncertainty. But I think, look, the long game, and you said this the other day, I was watching you all the time. You said this thing is turning out better than we thought. And we're talking about a global economic reset. And if you look at the tariff money coming in, proof positive, it's having good impact on us. But yes, it did create a lot of uneasiness, a lot of uncertainty. Do we buy in advance? Do we have enough working capital to buy in advance to avoid the tariff? So there was a lot of manipulation going on. I don't mean that in a negative way, but there was a lot of push-pull going on. And I would say, the aerospace business, for example, still is suffering on supply chain, still, because, that business has gone from feast to famine, back to, feast. It goes up and down. some of the problems that they've had now, as a result of some issues, performance issues, that thing is really slowed down, and it's just causing an imbalance with some of, particularly the precious metals, right? And that's why President Trump's working so hard to make sure that we have an adequate supply for Inconel and some of the more precious materials that have to go into these jet engines and some of the structural stuff.
So, Bob, we just got a minute or two left, and appreciate so much you're coming on. This is the great Bob Nardelli from Home Depot, from GE, from Chrysler, ran some of America's great companies, one of our great businessmen of all time. What is your view of the economy now? Are you bullish? Or do you think that I'm pretty bullish, notwithstanding some of the bumps in the road that we've seen. But I just think Trump is pushing almost all the right buttons. He's realigning our economy for the 21st century. But what's your view?
Yeah, Steve, I'm right in that category with you. I'm absolutely there. Let's think about what we just saw this week, right? Probably the largest joint venture, $70 billion, right? Union Pacific, Norfolk Southern. Yep. I mean, that sets the bar pretty high going forward. But I'm also seeing a lot of middle market private equity, a lot of capital, a lot of deployment of capital, a lot of investment back into manufacturing. So I'm right with you, Steve. I think we had some froth out there, but if you have experience and you aren't intimidated by it, you'll work your way through it. If you're a first-time CEO, it could be a little unsettling, but I think it's calming down. And we start to see a path forward where we can enjoy prosperity, as you say all the time, and really get our economy back to where it was, where President Trump and you and the rest of the advisors believe we can get, Steve. So I'm with you, man. Let's keep this thing going.
Well, those are the words of a very wise man, Bob Nardelli, who understands the economy just about as well as anyone. Bob, thanks so much for taking some time on a Saturday afternoon and blessing us with your words of wisdom. Folks, this is The More Money Show, and we'll be right back.
The More Money Show with Steve Moore on the Red Apple Podcast Network. The More Money Show with Steve Moore. Entertaining and informative on the Red Apple Podcast Network.
We're back, folks. This is The More Money Show on WABC. Thanks so much for joining. We have great ratings, so I'm so honored to have people listening. Be sure to get the Unleash Prosperity newsletter hotline. If you're not getting that, it is absolutely free, folks. Just go to unleashprosperity.com and get it. Click on hotline and sign up for it, and we will get it to you 5 mornings a week, and you'll be the smartest person in the room. So we've got 3 or 4 people on the line. We're not going to probably get to everybody before the break, but I want to get to those who I can. One of the questions I asked at the top of the show, if you're just joining, is why aren't women having babies? Why are our birth rates down in the United States? I mean, are women the problem? Are men the problem? It takes 2 to tango. What's going on here? Maybe Kay from the Bronx has an answer to that. Kay, thanks for joining.
Well, one of the things that is being, spoken about is that in the vaccines that were given to people, there is something called sometimes snake venom, which affects fertility and is causing one.
Hold on, Kay, stop. I have not heard this before. So you're saying that you think fertility has been negatively affected by the vaccine?
Yes.
Oh, I didn't know that. I'm going to have to look this up.
Okay. It could affect fertility for about 10 years.
Wow.
And they're saying that...
Is it affecting men or women? Men or women?
It affects, I think, both men and women, but mostly the women.
Oh, wow.
Yes, and that's why one of the reasons they're saying 1 in 3 Canadian couples are having trouble with fertility and 1 in 4 American couples.
Well, that is I hope you're wrong about that, because a father of 3 kids and a stepfather of 2 kids, I mean, there's nothing that brings you more joy in life than having a kid. Kay, thank you for warning about that. I'm going to look that up. I appreciate your call. Let's go to Jimmy.
Hey, Steve. Love the show,
Hi.
man. Yeah, I have 4 daughters. So your last caller, I've heard that same thing where women are infertile, but I was calling, I had this talk with my daughter. They're both living in Manhattan. They're a few years out of college. 26, 27. They got some decent jobs, maybe making 70, 80,000 a year, but they are living in Manhattan. And it's just, she started looking up. She's starting to plan her life, to get the house shortly and get married and have a child. But just to have a child, it's like $60,000 to $80,000.
It's expensive. Yeah, it's expensive.
And,
you think that?
Kids,
so, by the way, hold on, Jimmy. Are your daughters are they of childbearing age or?
26 and 27. Yeah.
Yeah. Well, that's right in the strike zone. So, how many grandkids do you have?
None yet. I have two young ones at home, too.
I have the same problem. I mean, I have three sons, 33, 32, and 23. No grandkids yet. I'm getting desperate here, but this is a big problem. Jimmy, we're up against a hard break, so I have to thank you for calling. Great comments. We need to get the women and the men together and start having babies. Folks, we're going to take a quick break. When we come back, we're going to be with my friend, John Evans, who knows more about what's going on with the in our prisons, and it's a real scandal. You got to hear this.
The More Money Show with Steve Moore on the Red Apple Podcast Network. The More Money Show with Steve Moore, entertaining and informative on the Red Apple Podcast Network.
Welcome back, folks. This is the More Money Show. I hope you're having a wonderful weekend. It is finally, we've gotten a break from this horrible weather on the East Coast with all the storms and humidity and heat. I hope you've got a break where you are there in New York, but it's an absolutely glorious, gorgeous day here in the Washington, D.C. area. And so after the show is over, you have to get out and get some fresh air and get some exercise, get some sunlight. It is absolutely perfect here. Let's see. One of my good friends who I've known for many years and has been a really good friend and advisor is John Evans. And John is a Floridian. He is going to be coming on the show in a few minutes. And really, I want you to listen to him because what's going on in our prisons today, I think, is a scandal. And we need to reform our prisons. And so, Mr. Producer, let me know when he comes on. In the meantime, do we still have Corey on from Long Island?
No, but we have Jerry from New Jersey.
Okay, Jerry, quickly, what do you got for us? Thanks for calling in.
Steve, just one quick one. Well, first of all, the best version of money is Ronnie Millsap, but I won't argue with that.
Yes, I've heard that one. No, I have to disagree with you, my friend. I think John Lennon's version is better, but they're both great.
just one quick thing. I think it's necessary that we talk about how much damage can be done by one silly ideological ruling in the endangerment clause, what that has done with CO2. It has turned our economy, our society up in the air over one stupid ruling that CO2 actually controls the climate, which it doesn't, and that it's responsible for global warming, which it basically isn't because first you have the warming, then you have the increase in CO2. So the whole thing is just, I wish that Donald Trump had listened to Will Happer in his first term and not his daughter when it comes to climate and things like that.
First of all, so thank you so much for calling in. Great call. And I'm so glad you called in. That's why I have callers on the show because you're really smart people. You have to be smart to listen to the More Money Show. And I'm so glad you called in because this is something I wanted to bring up and I forgot to bring up, which is one of the great decisions this week was to overturn this endangerment finding was this idea that CO2, carbon dioxide, is a pollutant. Carbon dioxide is not, NOT, is not a pollution. You don't get sick from carbon dioxide. Now, some people say it may cause some gradual warming, and I'm not a climatologist, but you do. Now, by the way, carbon monoxide is a pollution. Carbon dioxide is not a pollution. Same thing with, sulfur in the air. That's a pollution. Lead in the air. That's a pollution. Smog. That's a pollution. But carbon dioxide, without carbon dioxide, there's no life on this planet. And you got me going here, sir, so I've got to go on with this. First of all, the idea that the ocean's rising is a mythology. It simply isn't true. Second of all, the idea that the CO2 is what's causing warming. There is some trend in warming. There's no question about it. But the idea that CO2 is what's causing this atmosphere, because it's like 0.06% of the atmosphere is carbon dioxide. So it's a tiny, tiny, tiny fraction of the atmosphere. And the other thing I wanted to mention to you folks, because I know a lot of you believe that climate change is going to be the end of the world and we have to shut down our energy and we have to stop using air conditioning and so on. But the truth is that if you had the choice between a slight warming of temperatures over the next 100 years or a slight falling in temperatures so that things get colder, every piece of evidence shows that warming is better for mankind than cooling. Now, if they said, we're going to see a 2-degree reduction in temperatures, that would be something to be really, really, really worried about. People die from the cold. Now, sometimes people die from heat, but death rates from cold weather are 10 times higher than death rates for warm weather. So if it gets a little warmer, that's probably better for the planet than if things get colder. Great point. I'm so glad you brought that to our attention, because it's a myth. It's a lie that you've been told over and over again. Mr. Producer, do we have John Evans yet? Okay, so what we'll do is we'll take a quick break, then come back with John Evans. And folks, this is the More Money Show. Do not forget to get the Unleash Prosperity Hotline. It is absolutely critical. I want you to get it. I want you to get it for your friends. We have 150,000 readers. We want 1 million readers. We want everybody listening to this show to get it. So go to unleashprosperity.com and get it for free. It costs nothing. So why wouldn't you get it? Why wouldn't you want to be the smartest person in the room? We'll be right back.
The More Money Show with Steve Moore on the Red Apple Podcast Network. The More Money Show with Steve Moore. Entertaining and informative on the Red Apple Podcast Network.
Folks, we're back. This is the More Money Show. We finally tracked down my good friend John Evans. This is really important stuff, folks. I think one of the great tragedies of our country right now is what's going on in prisons. We're not rehabilitating people. There are a lot of innocent people in prison, and all we are doing is creating a lifetime criminals, basically. That what we're training people in prisons to do is become a lifetime criminal. There are exceptions to that, but John, well, first of all, thanks for coming on. You're worth promising people. First of all, tell our listeners, John, about these recidivism rates, because they are so tragic.
Steve Moore, thank you so much for having me on the show. Hello, everybody. It's so important for all the listeners, for the entire republic, to understand the scourge that's going on with recidivism. Now, what do I mean by recidivism? When you go into prison, you've committed a crime, you go to prison, and then you are released, you've served your time. 83% of the time, Steve Moore, folks will be returning to prison. In other words, they will reoffend.
That's
and that
basically
is just morally reprehensible.
That's basically 6 out of 7 of the prisoners and back in prison. So they're not being rehabilitated.
Yeah, rehabilitation is a joke. It's a prison. It's not a rehabilitation. And we look at parts of Europe, Steve, and we see recidivism rates as low as 5%. So we've been missing the mark here.
What's the difference? I mean, why are our prisons not? We all believe that if people commit a heinous crime, they should go to jail and they should go to prison. We want to keep, violent people off our streets, of course.
Right.
But why is it that we're not succeeding in building a better life for, so that when they come out of prison, they can, lead a normal life?
Well, that is an enormous question. And here's part of the answer in short. Remember when we were in high school way back in the day, we had a thing called shop. People learned how to work with their hands. That has been dropped because their entire country has been moving towards, let's send everybody to college. Let's send everybody to college. And that's noble, but it's off the mark because we need, as you know, Steve Moore, better than anybody, there is a radical shortfall of tradespeople. So what has happened is these people have dropped out of society. When in high school, they lost the chance to learn how to do something that is additive to the republic. Okay, and so they got themselves into trouble. They did something stupid. They end up in prison and they rot. Again, more than 4 out of 5 times we're seeing recidivism happen. So it is a lack of proper coaching and showing them the way, giving them true hope. And Steve, what I mean by hope is not wistful hope, like I hope I win the lottery later. I mean a plan, a trade, something they can do.
Right.
But there is great news afoot, and that is this idea, this miracle of virtual reality training.
So how does this work?
Okay. So what we've discovered, I mean, this is gobsmacking. I mean, it's so exciting. What virtual reality, as you know, I'm a social scientist. I study how adults learn. And when you learn something in a headset, a virtual reality headset, you're going to retain, and please fact check me. I want all your viewers to fact check me on this. You are going to retain 83% more of the content.
Mm-hmm.
I mean, it's breathtaking. So to wit, Steve, our head of education just called me. She was so excited. Just before the show, she said, John, we have a guy, an inmate, who was reading at the kindergarten level. This is a 23-year-old male. He's reading. Most of our inmates, one half, Steve, are illiterate, functionally illiterate. This guy was reading at the kindergarten level. After 5 days in the headset using adult phonics, he's reading at the 4th grade level. 5 days. Another example, if you want to become an electrical helper making somewhere between $17 and $22 an hour, it's going to take you somewhere between 12 and 4 weeks to learn how to do that. With the virtual reality headset, that gets compressed down to 5 to 7 days. So we're disintermediating, that's a fancy word, sorry, but we're moving all the distractions when the student is learning. And here's the big one, Steve Moore. This is huge. I want all your listeners to get this. We are removing shame from the learning process. Shame is the biggest killer when you're trying to learn, especially when you're an adult.
What do you mean by that? Shame. What does that mean?
Shame. Yeah.
I know what shame is, but
yeah. So this is what I mean specifically. So most of our inmates, and by the way, here's a stat for you. You love statistics more than anybody, Steve Moore. We have 5% of the world's population. We have 25% of the inmates. I want everybody to digest that. We have 5% of the world's population, while we have 25% of the world's inmates. Okay, so back to your question on shame. Okay, most of our inmates were shamed in junior high and high school, so they dropped out. Why is that? They're kinesthetic learners by and by, Steve. That means they learn with their hands. They're made for the trades. And we dropped shop classes. And that was egregious. That was a terrible move for society. So these folks, these inmates, they have nowhere to turn. And so they're being giggled at when they get their English paper back and they get a D- again. And they get laughed at. So they retain these scars. We all have them from childhood in different manners. They retain these scars, these pains from the classroom, right? Now, everything changes because the classroom is the virtual reality headset, and they can learn at their own pace.
Right. So you're saying that we can put these in the prisons. Now, are the inmates receptive to these programs? Or
Oh, my gosh. I had the great fortune, Steve, of giving a keynote. That's probably the most meaningful keynote I've ever been a part of at one of the largest prisons in Florida. I want to give Ron DeSantis a lot of credit. I want to give Senator Ashley Moody. They've been incredible. Byron Donalds has been amazing too. We graduated 71 inmates. This is the first time most of them had ever been to a graduation, Steve. And so they absolutely were so grateful for the opportunity. Heretofore, they had been rotting in prison, 71. So 35 of them earned their high school diploma, not a GED, by the way. A GED has an anemic 2% success rate with inmates. But with our headset, with virtual reality headsets, you learn at your own pace. You learn asynchronously. We have a 95% success rate. So I'm telling you, at this prison in Central Florida, 2 weeks ago, I thought the roof was going to come off. I mean, the gratitude and the energy in this room. Now, listen, I want to underscore a very important point for your listeners, Steve. You said it at the outset of this interview, for which I'm very grateful. You said this is not about being soft on crime, and this is not being soft on crime. There are certain people that should be in prison and stay in prison. God be with them. But the lion's share, by and large, in my experience, what we see in the data is that we have scores of people that are rotting, and it's heart-wrenching.
Yeah,
it
it's
really
sad.
is.
It's pathetic. It is, and I know exactly what you're talking about, firsthand knowledge of that. And look, a lot of these are kids, right, that maybe committed a bad crime when they're 18 or 19 years old, and they're still in prison when they're 28 years old, and then they get out and they know nothing. How could they possibly assimilate back into society if they have no skills, no friends, and so this provides them a second chance.
That's exactly right. There's a very famous study that, and all your listeners, please, if you have children or grandchildren, please hear this. You will become the expectation of your 5 closest friends. You will become the expectation of your 5 closest friends. So to your point, Steve Moore, what you just said, you've done your time, you come out of prison, you have no skill. You have no skill heretofore. So what do you do? You go back to your boys or your gals and you hang out on the street corner. And all of a sudden, you know what? Mm-hmm. Hey, if I just do this one run, this one drug run, I can pick up $5,000. Right, and there
Right.
and then it slides, and the whole thing goes down.
Boom, you're back in prison.
That's right. That's exactly right.
So, this is so important. I mean, we do want our prison to punish, but we also want our prisons. You said rehabilitation is a joke, and that's sad because what we're getting is high rates of. We're not solving the crime problem; we're making it worse.
That's right. That's exactly right. And think about economics. Selling that to Steve Moore. AI is here, right? So AI is going to be displacing a lot of jobs. You know what's not going to be displacing? Technical jobs, like an electrician coming into your home, a plumber, an HVAC person. So this is prophylactic for AI, which is, again, coming. Whether we like it or not, this tsunami is upon us. This is a great solution. So, and if anybody wants to hear just a tremendous podcast from one of our co-founders at Promising People, please take a look at have a listen to A New Lens with Common Good Capital. It's episode 73. Common Good Capital, A New Lens, and you'll hear one of the most bone-chilling interviews you've ever heard about how sclerotic and messed up our penal system is. But with leaders like you, Steve Moore, and Ron DeSantis, we can make a difference, man. We can do it. There's hope.
And it will we all believe in second chances in life, and everyone has made stupid mistakes in their life. And so look, there are some people who are just rotten people that we got to keep them behind bars because they're threats to the American public. But we're not doing anybody any good by keeping them in prison a long time, letting them out. They have nothing, no skills, no friends, no family, and of course they're going to go right back into a life of crime. Give them the skills, and a lot of them will become productive citizens.
You got it. And listen, I don't know how political we want to get on this show, but I gotta give a shout out to President Donald J. Trump. I mean, he expanded the scope of Pell. Oh my gosh, Good. He expanded the scope of Pell grants to help to cover. We call them returning citizens. Okay, so now if you want, let's just say the spirit moves you and you want to give $200 to PromisingPeopleMissions.com. That's our shameless plug. PromisingPeopleMissions.com. That $200 will that's going to unlock $50,000 worth of Pell funding. That's going to would help somebody. We have a partnership with Valley Forge Military College. So you're talking about somebody in prison right now who can't even read. We're going to teach them how to read. We're going to give them a high school diploma, and then we're going to get them to Valley Forge with a Pell Grant, and they can get a 2-year degree, a 4-year degree. Steve Moore, they can go all the way and get a PhD, and we fully expect that to happen.
I love it. All right. Well, John, that is a great program. I know that you've worked very closely with Ron DeSantis there, the great governor of Florida. If he's on board, I'm certainly on board because he's been amazing. And we got to take this national. We got to solve this problem, folks. We're not doing anybody any good. We're to allow millions of people's lives to be ruined because we have a penal system that does not work. That's the great John Evans. John, thanks for joining. This is the More Money Show, and folks, we'll be right back.
God bless you, Steve Moore.
Oh, we got 1 or 2 more minutes. So I want to remind people one last time that if you will please sign up for the Unleash Prosperity Hotline, you will be very pleased about this. I guarantee you it. I mean, I can guarantee you're going to like it. I don't care if you're a liberal or conservative. We cover the economy, we cover politics, and it is a great vehicle. The other thing I want folks to do is we released a new website called votewithyourfeet.net. I want people to go to this because most of the people listening to the show right now, you're in the New York area or you're in New Jersey. Guess what? 2 states, when you go to New York to votewithyourfeet.net, excuse me, you'll be able to you can push the button on New York, and then you can see, let's say, Texas, and you can see the moving vans. You can see on the screen what's happening. Are people moving to New York or are they moving to Texas? And what you see is massive migration out of New York. It's a tragedy, actually, what's happened. New York has lost 2.5 million people on net over the last 10 years to states like Texas and Florida and Utah and Montana, et cetera, et cetera. We got to turn that around. New York City is our empire city. We need to make sure it is. Look, I'm going to make this very simple to you folks. If this Mamdani is elected the mayor, who's a socialist / communist, if he is elected mayor, Wall Street will no longer be in New York. Wall Street will be in Dallas, Texas, or will move to Miami, Florida, or will move to Austin, Texas. It will not stay in New York. You cannot be the financial center of the world with the highest taxes in the industrialized world that is driving people out of the city. It's a tragedy to suicide. By the way, I'm from Chicago. The same thing's happening in Illinois. Illinois is losing people. The 4 states that are losing the most people, are you ready for this? New York, California, Illinois, New Jersey. Gee, what do those states have in common? Well, they have high taxes, right? New York and California have the highest taxes. Guess what? Rich people are moving out. High income people are moving out. Middle class people are moving out. They can't afford to live in those states anymore. So you raise the taxes on the people who are, quote, rich in New York, you're not going to have any rich people left to tax. It's that simple. High taxes don't redistribute income. They redistribute where people live. And so you look at Texas and Florida, and you look at Tennessee, and you look at states like New Hampshire. Those states are capturing the people that are leaving states like Massachusetts with high taxes, New Jersey with high taxes, New York with high taxes. If you live in New York or you live in New Jersey, you have big, big elections coming up. And I'm not here to talk to you about who you should vote for. I don't try to get too political, but I will say this. If you stay with what you've got, don't expect for things to change. New Jersey needs change. Wake up, New Jersey residents. Try something different, because what's happening under the current leadership is not happening. And same thing with New York City. Let's get some new leadership in, because there's one guy named Rudy Giuliani who turned that city around. I was there firsthand. I would go to New York City twice a week back then when Rudy was mayor. You could see every single week the crime got better. The filth on the streets got better. The schools got better. The taxes got better. The economy got better. People were happier. So this is a key moment for people in New York City. And I'm not here to tell you who to vote for. I'm just trying to tell you, I know what will happen if you elect a socialist mayor. It is going to ruin one of the greatest cities in the world, New York City. I don't want to see it to happen. I saw it happen, by the way, folks, in Chicago. Brandon Johnson, wacko, left-winger, teacher union organizer, was elected mayor. You know, he's actually a very charismatic guy, handsome guy, but he's got all the wrong ideas, and Chicago is being destroyed. I don't want to see that to happen in New York City. The other thing I wanted to mention, if you go to votewithyourfeet.net, and this is a great website, your kids should go to it. It's really fun to use. You can click on 2 states. You can see where people moving to or from. The states that are attracting those people are Florida, Texas, Tennessee, Utah, Montana, Idaho. In terms of percentages, has grown like crazy. People are leaving progressive areas. Progressives destroy everything they touch. That's one of Moore's rule. Progressives, anytime they take power in a state or a city, or God forbid our federal government, they destroy it, just like Joe Biden destroyed our economy. So folks, stay firm. Let's make New York City great again. Let's do that, because it is so important to our country that New York remain the financial center of the world. Folks, I hope you guys have a great weekend. Get some vacation. We all should take some days off in August and re-energize our batteries so we're ready to go. Appreciate everybody listening, and we'll be back next week. This is the More Money Show.
Thanks for listening to More Money with Steve Moore. You can hear More Money with Steve Moore Saturday afternoons at 1. If you like the podcast, share it with your friends and listen anytime at WABCRadio.com and download the WABC Radio app. Hit that subscribe button on all major podcast platforms. Plus, follow WABC on social on Instagram, TikTok, Facebook, and X. See you next time for a new episode so you never have to wonder,
what the heck is going on here?
When you're having a baby, there's a lot on your mind. At Northwell's Staten Island University Hospital, you can rest easy with our reimagined labor and delivery experience. Our new Grapuso Women and Newborn Center provides private suites, overnight accommodations for a loved one, and a top-level NICU. All powered by the team that cares for the most moms and babies in New York. It's care made for Staten Island and made for you. Visit northwell.edu/newbaby. Staten Island University Hospital. Raise health.